very warm welcome, dear students. This is your friend Bajrang Agarwal. So today we are going to start accountancy. So guys, are you ready? It's going to be very easy. Don't worry. So we would be following ICAI study modules, and students who are missing the classes, they can avail this lecture as video backup facility. Those who are studying live with me, and few students who are not in Kolkata, so they can avail the entire 100% recorded sessions. So you get the same quality, just in live you can interact with me on the spot. So these guys are all doing business. There is an involvement of money. So inflow and outflow, we call it as business transaction, and at the end of the transaction we get the results. So these results are known as events. So I think this is very easy to understand. These transactions are recorded, and then the accounting discipline helps in decision making. So we start with meaning of accounting. Accounting is the art of recording, classifying and summarizing. We need to record. This is the first step. And what do you record? You record transactions. Transactions means involvement of money plus certain action. In a significant manner, you will be given certain formats, certain rules, and in terms of money. So you will be recording only those transactions where money is involved. So transactions would be recorded, events would be recorded of financial character. And once you record, then you classify, then you summarize, and then finally you interpret. So this is the definition given by AICPA. Now let me test your skills whether you have really understood the meaning of transaction and events. So guys, are you ready? An individual invest. So is this an action? Yes. 2 lakh rupees. So he is investing action and then money. So this is a transaction. On running a stationery business, on 1st January he purchases goods for 1,15,000. Will this be a transaction? So purchase of good, yes sir, this is a transaction. And sells for 1,47,000. Yes sir, this is a transaction. During the month of January, he pays shop rent for the month ₹5,000. Yes sir, this is a transaction. And finds that still he has goods worth ₹15,000 in hand. This is called closing stock. Closing stock. Here, do you find any action? No sir. This is the result of the previous action of purchase and sale. So the result is closing stock of 15,000. So this result we call it as event. So when we start accountancy, you all need to know the meaning and the differences between transaction and event. The individual performs an economic activity. If he was doing it for charity, it will not be called economic activity. So this is the business activity. One event we know, which is the closing stock, and the last event is he earns a surplus of 42,000 rupees. So surplus is the result. At the end of the month, what is the result? The result is I made a surplus of 42,000 rupees. So result means events. So how do the process of accounting start? So the first step is identify. Identify what? You have to identify the events and transactions. Death of the manager, will it be a transaction? This manager was very important, but this will not be a transaction because there is no outflow of money here. So this is not a transaction. If it is a financial character, what we do is we record. We record. Where do we record? In the books of account. So a telecom company, they will capture all the transactions made by the user. So I think you understand now what do we exactly mean by transactions. So when we record it in the primary books. Primary means first. So this recording is done in journal or subsidiary books. So journal or subsidiary books can also be called as primary books. So what do we record? We record the transactions. So when we summarize means repeated transaction. Let's say purchase 5,000, purchase 6,000, purchase 7,000. So total purchase is 18,000. So this is summarized. So recording in the primary books called journal or subsidiary books. Now after recording, they are transferred to secondary books, which is called ledger. So now you transfer it to ledger. In ledger we classify the transaction in terms of income, expense, assets and liabilities according to their characteristics and summarized in profit and loss account and balance sheet. When we purchase, we know that this is the expense. When we sell, we know that this is income. Now when we buy AC, actually we are incurring expense, but we will not classify it as expense. We will call it as asset. This is very important, dear students. So why we call it asset? Because this AC will help the business. If we buy a machinery, we will not call it as expense. Machinery will be called as asset. Now again, why? Because this machine is going to last for more than 1 year. So more than 1 year, it is going to help in the business. So whenever it is more than 1 year, we classify it as asset. And if it is the oil of the machinery, which we need every 7 days, so this is the expense. You buy a printer, the printer's life will be more than 1 year, you will call it as asset. You buy the ink, you will call it as expense. So all these things are classified as income, expense, asset, liability. In profit and loss account, all the income you keep it on the right side, all the expense you keep it on the left side. We call this as the debit side, we call this as credit side, balance sheet. Here you record all the liabilities and here you record all the assets. So it is very easy. This is what exactly we need to do, but we need to follow certain rules, certain principles of how we need to record, which we are going to study shortly. So we see that communication has become very important. So definition has changed. In the year 1970, the function of accounting is to provide quantitative information, primarily of financial nature, about economic entities that is needed to be useful in making economic decisions. So all this balance sheet, the profit and loss statement, they are made with the view that users can make proper economic decisions. So the process of recording, classifying, summarizing, analyzing, interpreting what? The financial transactions and communicating. Now this communicating has become very, very important. Communicating the results thereof to the persons interested in such information. So who are interested? Banks are interested. Employees are interested. Government wants to collect tax. They are interested. They are interested in the financial statements. You want to invest in the shares of a company. You are an investor. So you are also interested in such information. Accountants, they need to provide the information ready for intended users so that they can make economic decisions. So I am just highlighting the important words, the key words, so that you do not have to go through the entire ICAI study material, but only the very important words. So procedural aspects of accounting, basically two process: generating financial information and using financial information. So using is by the intended users, and generating financial information here is the work of the accountants. So chartered accountants, you need to generate the financial information. This information is generated using the records. What are we recording? We are recording transactions and events. So I hope it is absolutely clear now. So how do you generate the financial information? First you record, then you classify, then you summarize, then you analyze, and then you interpret. What do you do next after interpretation? You communicate. You record all the business transactions which are of financial character. How do you record? There has to be some evidence. So these evidence are sales bill, passbook, salary slip. So these are all recorded in the books of account. So where do you record? You record it in a book called journal. Okay. So this book can be further divided into several subsidiary books according to the nature and size of the business. If it is a small business, okay, come on, let's record it in journal. But if it is a big business, we record them in several subsidiary books. So after recording, we classify. So what do we mean by classify? Basically, it is to group the transactions. So all the purchase in one side, all the sale in one side, all the salary in one side, all the goods returned for defects in one side. So you are basically classifying and making it into group transactions. Where do you classify? You classify in this into a book called ledger. So separate ledger for salaries, rent, printing, stationeries, advertisements, etc. So all expenses under these heads, after being recorded in the journal, will be classified under separate heads in the ledger. So recording has been done, classifying has been done. Now we summarize From here we start the preparation of financial statements. When we summarize, this summary is useful for the internal user as well as the external users. Then we analyze. Basically now we are trying to understand whether this is asset or this is an expense. Outflow for ink, outflow for printer. So you have to analyze that this printer is an asset recorded finally in the balance sheet, and this ink will be in the profit and loss statement. So you basically analyze. You also analyze whether this is a current asset, whether this is fixed asset. You need to understand which item you will record in profit and loss and which item you will record it in balance sheet. So this is the work of analysis. Proper analysis is done. Now you can interpret. So what do you interpret? You interpret the financial condition and profitability of the business operations. If this business is making profit, you will invest. So basically, interpretation will help you. If this business made profit, why it made profit, why it happened, okay, what is likely to happen, what is the future of this business, should I invest or should I take out my money under specified conditions. So conditions will change. If it is a condition of COVID, so I can understand that this business incurred loss due to COVID, but when things will improve, this business will again make profit. So under specified conditions. Finally, you need to communicate. So this is a transmission of summarized, analyzed and interpreted information to the end users to enable them to make rational decisions. So how is this done? This is done through preparation and distribution of accounting reports. So these accounting reports are also known as the usual profit and loss account and the balance sheet, and additional informations are given in the form of accounting ratios, graphs, diagrams, fund flow statements, etc. Evolution of accounting as a social science. Dear students, this you can do on a self-study module. Any query you can ask me in the class or in the WhatsApp. So objectives of accounting: systematic recording of transactions, ascertainment of results of above recorded transactions, ascertainment of financial position of the business, providing information to users for rational decision making, to know the solvency position. With the help of accounting, we can measure our performance, profitability. How much profit will this business make in future? Means forecasting. If I'm a bank, should I give money? If I'm an investor, should I invest? If I'm an employee, will I get bonus? So I will make my decisions. I can compare the results of this year, previous year, and then I can evaluate. Finally, if I'm the management and I want to make some control, so I need to identify the weakness. I need to see which is a better and effective way of doing things. So this is a control function, and then we need to give tax to the government so we can evaluate our taxes. So dear students, today was just a small brief introduction. We start with bookkeeping in the next session. Thank you so much. I love you all. Bye bye.